Good evening. It's approximately 6:30. We're just going to give a few more moments to some of our virtual attendees to join us tonight. We had 10 people registered. I see that we have one other person in the room, so we're just going to give a moment or two to let everyone else catch up. Okay, so we will get started. It does happen periodically where on lovely nights like this, everyone that had good intentions of registering may be coming a little bit later, but we are going to get started because we want to be respectful of our speakers' time and our attendees' time. We are recording tonight's program. We will have a PDF of handouts available to share with attendees after tonight's program. Tonight's program should run anywhere between 60 and 90 minutes. There will be time for Q&A. So if you would like to submit any questions, either in the chat or the Q&A, our presenter, Mr. Winter, would be happy to address those periodically through tonight's program. Allow me to introduce myself. My name is Patty Smolin. I serve as a business liaison librarian at the Schaumburg Township District Library. The nature of my work is to plan programs and select materials and sources for those that are interested in job and career transition, financial literacy, or starting or growing a business. Tonight's program is focused on student loan financing and what's happening in the current climate. Mr. Winter is very well versed in this area. He has more than 30 years experience in helping his clients have a better understanding on certain commitments in the student loan process. And he has brought a wealth of fresh information to us tonight. So with that being said, I want to say, Mr. Winter, Dan Winter, thank you so very much for joining us and for bringing this very needed topic to our library.
Thank you, Patty. I'm very happy to present here and happy to provide the information that every single person probably in the country needs, because we know people, just about everybody knows somebody who has a student loan. So this is updated with exactly what's happening, fresh from the headlines about student loan finance happening right now. I'll go through the information. And if you have any more questions, I have a lot of information on my student loan law website and my blog. So next slide, Patty. Okay, and also before I start, I want to make sure everybody can put their questions in the chat, and periodically I'll check the chat and get to your questions. And if not, I'll get to them at the end. But it's very important you can ask the questions. And it's a very complicated, believe it or not, it's a complicated area. So just to give you a little bit of background, for those of you who might be wondering how to finance college and the background on college finance. People go to college for all sorts of reasons. It's definitely an investment in yourself or your children. And most of the time, people earn a lot more money over their lifetimes if they can go to college. It's not for everybody, but it certainly can get you a boost in your college. It can result in higher income, more career opportunities, better knowledge, different kinds of lifestyle, and you can get involved civically, so you're more educated on how our government works and things like that. But like any investment, it has risks and costs. And some people decide that they don't want to go to college, and it's not for everybody. They could do trade schools, and that's perfectly great because they can earn a lot of money too. But I'm going to go into what happens, how people finance college, and what happens afterwards, and what to do with student loans. So next slide. One back. So right now, to go to college, the average cost, and this is nationwide, not just for Illinois, but nationwide, the average in a public 2-year college, which would mean like a community college, I'm sorry, public 2 years in state would be $19,000 room and board, et cetera. So if you're going to something like College of Lake County or College of DuPage or something like that, would be $19,000 per year, which is a lot less. and then you go to like the University of Illinois or a state school, the average is 27,940. And in fact, that's throughout the whole country. But if you look at the University of Illinois, that's over $32,000 a year. At least when my son started, that was 4 years ago. And that was 32,000, and now it's gone. I think they just stopped the pledge to keep the tuition the same, and it's going up a little bit. But that's per year. So if you multiply each one of these by 4 for a 4-year degree, you get the idea. It's very expensive. And for out of state, it's that much more. The average is $45,000 a year. And for private schools, it's 57,000 and more. And actually, I just saw an article today that um, the there are schools this coming year that are going to be charging almost $100,000 a year for undergraduate. It's just insane, insanely expensive. So how do you pay for that? Next slide. Well, so if you look at this, I didn't make a pie chart, but really 29% come from grants and scholarships. So the idea is that students should really try to find a way to get scholarships, and that's by extracurricular activities and things like that that show up. Also, local scholarships are very important. Band scholarship, sports scholarships, of course, and things like that that can really help. And the key is grants and scholarships do not have to be repaid back. That's free money. That's what you want to get. And then the rest of it comes from loans, which we'll talk about today. And if the student can work part-time, work study, that's 10%. And or if they have some savings, uh, and they might borrow money from family members, and the rest comes from friends and relatives like good old mom and dad. So a lot of you listening probably would be a parent trying to send their child to school, or you have loans, and we'll get to that. But that is really the largest source. And when you fill out the financial aid forms, there is something called the expected family contribution, which was changed to a different name. And it's really, if you go through the forms, and the rest of it just has to be paid by the family. So how do you finance that? Next slide. So grants and scholarships, like I said, is free money, doesn't have to be repaid back. And the average for grants and scholarships is only about a third of the costs. So, and you see at those rates, there's still a hefty amount that the family and the student have to pay. Then there are Pell Grants for lower income or middle income families that are capped at $73.95 a year per student, which still doesn't pay the whole thing. And then in Illinois, there's something called the Monetary Award Program that gives you MAP grants, and you have to apply early so that the money doesn't run out for your student. And it's need-based, up to $8,400 a year, and you see it's on a first come, first served basis. And the student can get part-time jobs on campus or off, and then the parents and family contribute the rest. Next slide. So how does the student loan system work? First of all, every family has to fill out the FAFSA form, free application for federal student aid. That's a real tongue twister, but the website is studentaid.gov. And a lot of people say, well, why should I fill one out? I make too much money. Don't rule that out. And the school won't know what you need unless you fill out the form. And it's based on your income tax returns for the previous year. So every school uses it, and the Department of Education uses it. And normally the deadline's October 1st, but they rolled out a new system and it was delayed. And the students had through January to apply, and it was a mess. And even the results, because of this new transition, were delayed. But whatever at the end, the form says that your family has to pay, and the schools don't necessarily have to give you grants to do it, and the rest is filled in by student loans. Next slide. So how much money can just the student get? For federal loans, the undergraduate can only get $3,500 for the first year, $4,500 for the second year, and $5,500 the third year. And you saw the rates at the beginning. Is there any way that would pay for the cost of school? No, but they didn't, I guess the purpose of this was not to overload the student with loans, but then they end up getting money from different sources. And for undergraduate, those are the limits. For graduate school, for professional school or business school or dental school or medical school, it's unlimited. So, and with those schools running $100,000 a year plus for graduate schools, you can imagine how much in student loans that these young adults have. Private loans. So this is your, and I'll show you examples in a second, but this is your Discover and SoFi and things like that. It is exactly like using a credit card to pay for school. And there aren't the programs that I'm going to talk about later. So really, it's very difficult. And you might say to the lender, you might say something like, well, I'm not working, I can't pay. And they'll say tough, really, truly. And they will sue you and they will garnish any wages that you have. And the interest rates are variable. So they might go up and your income might be a lot lower. So that is the last resort. And if you take anything from this presentation, private loans are horrible. So next slide. So then the type of student loans available, federal student loans, those are guaranteed by the US government. It was set up in a system decades ago, and it went through every single administration since I believe the 1990s when it was expanded to give more students access to college, but it ended up driving up the cost. They can be issued by the Department of Education, or there were some loans that were issued by banks and guaranteed by the Department of Education. That's a different type of federal loan, not direct, but it was called FFEL. But anyway, those loans too are federal loans. And then you can have private loans that sound like federal loans, like Sallie Mae. Doesn't that sound like a federal agency? It used to be, but it isn't. And those type of loans really are the private loans that are very difficult to deal with. So next slide. So these are the federal loan servicers that you might find, and there's been a whole shift in who's servicing what. You don't even need to know that, but these are the big players in the system. Mohila from Missouri, Nelnet, which used to be called Great Lakes, Ed Financial, that's the Department of Education, and Aidvantage, and then Navient, ECMC, AES handles both. So how do you find out which kind of loans you have? I've had people come to me and say, well, I don't know what kind of loans I have. And so what you do is you go to studentaid.gov, and if you've taken loans, you should have an account there. And you log in, and some people don't even remember their login. You get the login, and then you see, and it gives you a summary of all your loans and when you have to start paying. And we had a 3-year deferment by the government during COVID, and since October, people have had to start paying. And people should start getting emails, should have gotten them saying how much they have to pay, how much the government wants you to pay. And if you have loans and you're looking for them and they're not on studentaid.gov, those are private loans. Next slide. So for federal loans, for what options are available for either type of loans. For private loans, like I said, it's like borrowing on a credit card for school. And it's basically whatever programs they have, whatever interest rate you signed up for, and you're at the mercy of the lender. And if you fall behind, then you can be sued and they can garnish your wages, they can freeze your bank account, whatever they can do for not paying a debt in your state, they can do. The only way to defend these totally and try to get them eliminated is based on the state law collection activities. You'd have to hire a lawyer who can defend it in those ways. For federal loans, there are very specific payment plans that are available, and those loans can be forgiven after a set amount of time. So for undergraduate, it's 20 years, and for grad school, it's 25 years. It sounds like a lot of time, but if you get a low enough payment, it can work to your advantage. There are other ways to get loans discharged or eliminated or forgiven. TPD is total and permanent disability. So if somebody went to school, was working for a while, and then is disabled for physical, mental type reasons, or anything like that, they can get their loans forgiven or discharged. Disabled veterans and on Parent Plus loans, if the student dies, you don't want to have that happen, but that's available. Or if your school was closed and you didn't get a degree, and you weren't able to graduate, or, and this is a big one, misrepresentation by the school. So there are some for-profit schools where the federal government has said, well, you shouldn't have to pay this loan if they misrepresented your job ability to get a job, or if they lied to students, or there were all sorts of other reasons. And public service loan forgiveness, that's a big one. If you work for a school or other kind of not-for-profit and you do it for 10 years and you make payments during that time, you can get your loans forgiven too. So there are all sorts of options with federal loans. I'm going to go into a little bit more detail on that. Next slide. Okay, so here are some of the repayment plans that are available. One is called Income Contingent Repayment Plan, or ICR. That is based on how much is left of the loan and how much you make. So the formula is it's the lesser of 20% or 12 years of the loan plus interest. And they base it on the poverty index, and there's all sorts of things dealing with how much your discretionary income should be. Parent Plus loans are the ones that have to use this formula, and it's 25-year forgiveness period, and you have to recertify every year. Again, it's based on your income, but it's not quite as good as the ones that we'll see. But if you have Parent Plus loans, that's the one that's available. There are a few little things you can do with Parent Plus loans to try to get around it, but basically that's it. Next slide. So what is an income-based repayment plan? IBR, that's a 15% above the disposable income, above the adjusted gross income, and it's a 25-year forgiveness period, and they use 150% of the poverty index, not 100%, and then that's how your payment is calculated. And again, you have to recertify every year based on your income shown on your federal income taxes. Next slide. So this year, things are all new after the pandemic, and there's an on-ramp actually, which will allow people to get into the right payment plan. So you won't be given late fees, you won't be penalized if you didn't start your payment plan right away. And the key is to get into a payment plan as soon as possible. So the SAVE program, that is the big news, and that started last summer, and it is going on now, and actually certain parts of it are going into effect now, and other parts are going into effect in a few months. So, and the big feature here is you can have a payment as low as zero. You heard me right, zero. You can have a zero payment and there's still interest going, but if there's interest going on the loan, that's more than what your payment is, so it certainly would if it's zero, then that interest is waived, which is great. And it's to be able to get people to get ahead and actually make progress on the loans if they can. And it's for direct loans only. You can't use it on Parent Plus loans. And there's a certain way to get your loans consolidated for the ones that are available. And again, it's 20-year forgiveness if it's undergrad only, or 25 years if it's a grad school. And you can authorize the IRS to just suck in your income from your tax returns, and it's much more automatic, and it's just really the best payment plan available right now. if you're lower income. Next slide. So this is the SAVE program getting into the weeds, but then they give you an allowance of 225% of the poverty index, and that's when they start calculating your payment. And so as of July, so right now it's at 10% of your disposable income, and then as of July, it's going to go down to 5% and for undergrad and 10% for everything else. And then the president put in some more provisions to help people with lower balances. And for undergraduate, you pay for 20 years and the rest is forgiven. For graduate school, it's capped at 25 years and you can consolidate. I'll tell you about that in a second. So next slide. So here is the new developments that happened starting in 2023, the Fresh Start Initiative, which means that if you were behind, you can just call and say, I need to get my loan out of default, and they'll do it. And you can get into these income-driven repayment plans. And that was through August 31st, of this year. And it's so other people say, well, why can't you eliminate them in bankruptcy, or can I? So bankruptcy discharge is very difficult because the standard is what's called undue hardship. And judges and courts around the country have defined undue hardship very narrowly, which means that disabled people, people that can't work, people that can't pay at all, are able to discharge the student loans, and that's it. But now there have been a few cracks in the wall here, and the Department of Justice actually has a more streamlined procedure to get the cases decided in a more uniform way, and they will make it a little bit easier, still not a lot, and it depends on the district. In this district, they're still pretty strict, but I've seen people starting to get their student loans discharged in bankruptcy, but again, it's very, very limited. So next slide. So this is the big deal right now. It's called the account adjustment, the one-time account adjustment. And it's only good through the end of this month. So if you're watching this now, it's very important that you get on this, because if you consolidate your loans and you have federal loans, you get even a one-time, it's called IDR waiver, which means it gives you credit for deferments and forbearances that have happened during COVID and other times. What was happening is that servicers were not giving borrowers the right information, and people would call up and say, I can't afford the payment, whatever it was. They wouldn't put them in a payment plan, but they would defer the payments or get a forbearance. But all it did was just kick the can down the road. It didn't get people on the way towards forbearance. So this really helps because it gives people a lot more credit. And we'll find out. So what happens is you have to have your loans consolidated into direct federal loans before the end of the month. And then they'll be processed through the summer and you will get the adjustment. And so, for example, if somebody has been paying on their loans for 10 years and they had COVID deferments and five more years worth of so that's COVID is 3 years, and then they might have 5 more years of deferments and forbearances. They would get credit for 18 years, and they'd have 2 more years to go. So this is really key, and it counts towards these forgiveness limits. So the restriction is it has to be for federal direct loans. So these older loans called FFEL that I mentioned before aren't eligible. So you need to consolidate those. So it's very important that you do it or you talk to somebody who knows how to do it. But it's very important that this is the big deadline coming up. So that's why I wanted to get this across. So next slide. So what do I do? So if you decide to go to studentloanlawchicago.com, the first step is, like I said, to find out which federal loans you have. So you go to studentaid.gov and you download a text file, the raw data to my website, and then I can give a free report of what your loans are and the different types of options available. And then then there's a flat fee for an appointment. So I can go through a strategy of how to get your loan payments the lowest possible and get you on the road to forgiveness. I've had people that have had loans for 20 plus years and they've been in deferment or whatever, and his loans are going to be forgiven really soon. It's just amazing. Um, so I can get people into the best payment plan, um, and help with the application. I do a Zoom screen share and can help with consolidation, can help every year, and help with forgiveness applications. But that's kind of the process of how it works. Next slide. So these are some common questions. I want to know first if anybody has questions of their own. We can look in the chat box here. Does anybody have any questions right now?
I'm going to wait for questions from patrons, but I see that we had another person join us, which I appreciate. Dan, does that flat fee, is that set across the board, or is it dependent on what individuals bring to your door?
Well, what it is there's a flat fee for the initial meeting. So that's across the board. It's $200, and that covers analyzing the loans. It covers getting that report initially, which is free, and then I can go through and explain exactly what the next steps would be. And
Okay.
then if they want to, for example, consolidate, that's a flat fee. Um, if they want to get into one of these income-based repayment plans, the lowest possible one, that's another flat fee or whatever. But there are no surprises. Like, it's not going to be, oh my gosh, I spent 4 hours on your case and it's going to be thousands of dollars. This is very affordable. Um, and you'll know going in. But the idea is to know what your loans are, to know what type of loans they are, and to know what you can do. And that's my goal. And that's why I wanted to do this, is to educate people on that they do have options. And the student loan servicers don't always give people the right information, or they might not give you the information you need to have the best possible payment plan. So you don't know what you don't know, and that's why it's important to at least know what kind of loans you have. Some people don't even know that.
Well, I appreciate the very clear and direct answer. You've given a lot of information, and I'm so glad that we're doing this tonight. Even though I understand tonight is a very important sports night, and you know that wasn't really on my radar when we selected this date on our calendar. But the fact that there is an important deadline coming up down the pike in only, about 3 weeks' time, which is really important that you brought to tonight's attendees, as well as this recording that we will share with others that will benefit from that. I wasn't aware of that, so thank you for raising it.
Well, and that's why I wanted to do it as soon as possible, so it wasn't necessarily on the paper agenda that goes out to patrons, but you can get it out electronically a lot faster.
I'm still waiting for patron questions, and keep in mind, those that are attending, you can either submit by Q&A or chat. You're sharing a great deal for as far as what the students and the graduates, the steps that they can take. Is there anything available for those Parent Plus loans, for the parents that are really
Right.
stretched now with
So
that commitment?
what happens with Parent Plus loans is that there is a plan called income contingent repayment plans, and that may be sufficient for them. It may be a low enough payment. And right now, there's kind of a loophole called double consolidation. So they can consolidate some of their loans and then consolidate them again. It's a little more involved process, but then they can get to the SAVE program, which gives an even lower payment in a lot of cases. So really, that loophole probably is going to close within a year or so.
So parents that come
There
to
is
you
a
in the
way to do that. Yes, go ahead.
I'm so sorry. So parents that come to you in the same way that students or graduates can come to you will have that
Right.
same flat fee process for you to have a
Yes.
chance to review and assess the situation and your recommendations that'll follow.
Right. And some of these questions here, I've gotten in the past, and I thought that it would be good to go through some of these. Do you have any other?
No, I do not. You were spot on with answering each of mine. And being that we don't have any other questions from our attendees, we'll continue. And we'll take it from there.
Okay, so some of the common questions are, what's the best way to finance college for my child? Some of these things I highlighted in the program, but you got to exhaust first scholarships and grants. And I find that local, I mean, you can apply. There are all sorts of, all sorts of grant programs and scholarships out there. And there's an app called Scholly that you can try to find. But really, and you can write like for Kellogg's and get $1,000 here and there, but really the local scholarships for the local organizations, maybe Scouts has one, or your local uh, synagogue or church might have one, things like that. And then the next best thing is to get the federal loans for your child, even though you might say, well, I don't want to burden them with it, I'll take it all. But if it means getting private loans, that's not really the best. And like I said, avoid private loans, private student loans, as like the plague. Um, how can I get a payment plan with a private student loan lender? Really, it's just a matter of calling them and trying to work with uh, their customer service department and just doing the best you can with that. What happens if I don't pay my student loans? So for federal student loans, they haven't been as quick to sue people because of the pandemic and because of everything. Um, in rare cases, when people have hundreds of thousands of dollars worth of student loans, I would say that then people have gotten sued by the Department of Justice, but really there hasn't been as much of that on the federal loans. But they will hold your tax refunds, and I believe, but I think that they can take some of your Social Security too, but I'd have to do more research on that. But that is a possibility. For private loans, they can do whatever they can do if you default on any kind of debt, such as um, they could sue you, garnish your wages, and and really make your life miserable. And then you really wouldn't have a lot of money available to pay your other bills. What happens if a court strikes down a federal payment plan? I've talked to people and they said, well, why should I do this? The court might strike it down, like they did with the president's blanket forgiveness program. The president had an idea that to help people, he would authorize the Department of Education to forgive $10,000 worth of loans for people under a certain amount of money of income, and he would forgive $20,000 for other students. Well, the Supreme Court said that was overstepping his bounds just under that act that he used, under the HEROES Act, and so that never got implemented. But there are all sorts of things that the Department of Education is tinkering with on the edges, on the SAVE plan and other plans, and there is action in court, but you got to go with what you got. You cannot worry about what's going to happen in the future, and you might as well take advantage of what there is now. Um, and if they change one of the programs, you may be grandfathered in at whatever you've got. So the best thing to do is to take advantage of what programs there are now. How do I find out when my loans will be forgiven? What's going to happen is there's this huge account adjustment that they're doing over the summer, and then they should give you um, a number of months that you've been paying. So 120 is the magic number for public service loan forgiveness. That's 10 years, and it'll say how many payments you've been credited for. So it'll give you a number. Should I consolidate my loans? The answer is, if they're federal loans, most of the time, yes. If they're private loans, uh, if you can get a lower interest rate and a better lender, yes. But the big but here is that you should not consolidate your federal loans into a private loan. So you shouldn't go to SoFi, even though they advertise a ton, and put your federal loans there because there are a lot fewer options. How do I get public service loan forgiveness? So at the end of 10 years worth of payments, you fill out an application. That's basically it. And from what I heard of the president's announcement today, they're going to make that even easier. And some people who didn't apply or who didn't apply on time might get public service loan forgiveness as well. But that's something to talk to me about because there are going to be more developments on that in the future. What happens if I retire and I still have student loans? I've gotten a lot of that. I have a lot of people in their 60s and even 70s that have student loans for their children or for themselves. So the best thing to do is probably to get into the SAVE program because your income will be very low and your payments would be low, and you can have payments of zero for for the foreseeable future. So that's probably the best strategy. So those are the questions that I get commonly, most often. And if you have any questions later on, or if you watch this program, you can always email me or go to my website. My email address is on the presentation. It's djw@dwinterlaw.com. And the website is studentloanlawchicago.com. And I handle student loans for people from all over the country. It's not limited to just Chicago or Illinois because it's a federal loan. There are loans from all around the country. And I've had people actually from overseas, from Amsterdam, uh, and things like that who've had loans, federal loans. So really, there are no borders to student loan problems and student loan problems that I can solve. Um, so I don't see any more questions, but I'm happy to answer questions offline.
I don't see any more questions coming in. Do you want me to keep the slide up, or are we nearing the last
No, we're
slide?
done. I mean, I'm done with what
Okay.
I have. Um, but if
I
there are any more questions, people can always email me, or if they have a question that send it to you, you can always forward it to me.
I have entered your full contact information in the chat, which will be accessible to all registrants. Dan, I think you brought this to our library in such a timely way. And I honestly was not so familiar with the um, the intensity of the countdown, in raising these important programs to us, and also when these programs, have to be submitted by, when you have to apply for them for that April 30th deadline. I would very much like to welcome you back to our library at another time, either near the end of this year or next year, as I'm going to put aside the crystal ball and just say I'm almost sure that students are going to be faced with some new challenges. And I think that you're an excellent interpreter of those challenges to explain it in terms they can understand.
Thank you. And thank you so much for inviting me to present this because it's just so important that people know and are educated on how to do these things because there are trillions of dollars worth of student loans out there and people that are delaying purchases of houses and automobiles and starting families because of this. It's a real burden and it's really good to get it so that it's manageable at the very least.
One of the things that's very important in the element of business librarianship, that across the board, I mean, not just at the Schaumburg Library, but at other libraries too, is we put a lot of effort in identifying certain scams for seniors, and that's a really, really big topic.
Yeah.
And I certainly don't want to call any loan a scam. However, there are some loans that definitely have more credible criteria than others, that have more, reachable terms and commitments that individuals sign off on, especially when you're a student and you're really desperate to finance your education.
Right.
And I think in the same way that we look out for different populations and audiences, we do need to make students and graduates aware that they do have rights as well to explore options to do their debt consolidation or to relook the terms of their loan and to understand that it is not as dire as it may seem.
Right, and it gives people hope that there is a way, and there are plenty of scams out there in the student loan arena, and you can't just respond to an email and think that it's legit. So
Mhm.
you really need to double check your sources. And I know a lot of people do their research online on their own, but they may not know what the credible sources are. And there right now there are plenty of attorneys around the country doing just this, student loan law, and it's above and beyond you know, the fly-by-night operations that you might see. So it's very important to be knowledgeable, but to get it from the right source.
Well, in addition to the books in the library and the electronic services that are in our collection, I also like to say that the encounters and the interactions and programs that we do with experts in their field are also part of our collection. So the content that you brought here tonight, it was delivered this evening, and it will continue to benefit those that we can provide it to from the reference desk at our library. I want to thank you so much for taking the time out, Dan.
Thank you so much, Patty. And then again, if anybody has any questions, you can direct them to me or to Ms. Smolin, and then she can forward them on to me. So I'm happy to answer questions.
For those that attended tonight, I want to say thank you so very much for your time. And we look forward to seeing you again. And I'm back in the office tomorrow morning, as I'm sure Mr. Winter is. And we'll be back at it. If you have any other questions, you know how to reach us. Good night, everyone.
Thank you.
Thank you.